Right now, over 85% of business credit card applications are getting denied. And the reason this is happening is because most business owners don't know what needs to be on their credit profile and how it needs to be laid out to not run into any problems. In this video, I'm going to give you the 3 keys that you need to follow to be able to have your credit profile properly optimized and ready to go get business funding as soon as today. So let's head over to my computer and break everything down. All right, so the first step in this process is going to be credit optimization. A lot of times business owners get this wrong, and I want to start here with understanding the differences in credit scores. A lot of times people are checking their credit score on things like Credit Karma, Credit Sesame, Wallet Hub, all these kind of like third-party sites. And that's what you don't want to do, because these places use what's called a Vantage score 3.0. That's one that's currently out right now. And you don't want to rely on this because most lenders and banks, they don't really use Vantage scores at all to be able to underwrite and give you a lending decision. So most banks are using FICO. Now there's a whole bunch of different versions of FICO. You got FICO 3, 4, 8, 9, 10, and 10T are the ones that are out right now. And banks are pulling, a variety of the different FICO scoring models. So let's kind of look at the scoring ranges here. They're pretty similar for the most part, but look at kind of the differences that we have here in terms of like rate shopping. So this is like inquiries, which we're going to get into later in the video. So make sure you stay tuned. But 14 days for rate shopping is what they kind of give you when you're getting maybe like a whole bunch of inquiries at one time, maybe like your car shopping or refinancing or mortgage, things of that nature. Also, the difference between FICO is you see is 30 days and 45 days, depending on the model that's used. Again, like I told you, there's a different FICO scoring model, so you have to be aware of that. But 14 days versus 30 to 45 days, that's like the rate shopping window that each of these scoring models will give you. Now it says number of factors used to determine scores is 6 versus 5. Okay, complies with the Equal Credit Opportunity Act. Both of these do. And here's kind of where like the most important part here. This is why when you may be looking like something like Credit Karma, your score could be anywhere from 30, 50, 80 points off, up or down. That's very frequent and it happens a lot. So this is one of the reasons why, because Vantage Score 3.0, it weighs payment history at 40% versus a lot of these FICO scoring models weigh this at 35%. So that's a substantial difference, and that can have an impact on what your credit score will actually be between these two. So, and it says the minimum requirements to get a credit score: 1 active trade line or proof of public records or collections on file, versus FICO having 1 account open, minimum 6 month old, and then 1 account reported to credit bureaus in the past 6 months. So that's kind of like some of the differences between the two. But again, that's why you see these very wide fluctuations in between these scores, is because they just grade things differently and they view certain factors of your credit report more favorably or harshly than the other. So that's kind of why you see those things. I want to kind of lay out the fundamentals of having a optimized credit profile, because if you've been watching my channel at all, or this is maybe the first time you watching this, you're going to hear me talking about credit optimization. Okay, this is very important. I say this a lot on the channel, but this is why, because you need to have your credit profile optimized. We're talking about your personal credit here. You need to have this optimized if you want to have any shot at getting business funding. So it says the factors that lower your credit score. So late and missed payments, which you're going to get into; too much credit in use, which is utilization. We're going to touch on that in this video too. And then a short credit history or none at all. And then we have too many requests for new lines of credit. We kind of hit on that a little bit on the last slide there. And then too few types of credit, which is like your credit mix. That's also very important. Now, before I hit this next section, if you're enjoying this video so far, go ahead and smash that like button for me. Subscribe to the channel, hit the bell for notifications so you will be notified every time I drop a new video. And next, we're going to show you exactly how you can tackle high utilization problems and how to really kind of get that in line. All right, so utilization, this is like a very, very common problem with business owners when they're trying to get their credit profile in order. A lot of times people are under the assumption that, oh, if you're under 30%, you're good, or if I'm under 20%, I'm good. Those are kind personal credit tactics if you're just trying to get personal things like a vehicle or a personal credit card. But when you're trying to get business funding, they're looking at this stuff a lot more harshly. And so you have to be aware of this. The goal is you want to have it under 10%. Okay. So let's kind of dive into this. A lot of times people think, okay, well, I need to have each one of these cards under 10%. No, it's a total credit profile. So for this example here, we see there's a total balance of $846. And then the max credit limit is $4,950, which gives them a total utilization percentage of 17%. Okay. So when you're trying to bring down utilization, you got to know how to tackle this correctly or you're going to get it wrong. All right. And that's why I like statement close dates. I talk about that on this channel a lot. And kind of just go through my channel if you haven't seen it already with videos that I talk about that. But statement close dates are very important. This is how you can time when things are going to report to your credit profile. Okay. So for example, card 2, this card could report maybe on the 2nd of the month. This card could report, card 3 could be reporting on the 8th of the month. Right. So the max limit here is $3,000 and it has a balance of $300. Right. So you kind of just want to game plan and see which one of these cards you want to tackle that makes the most sense. Again, based on which statement dates are closing up so you can get the quickest kind of repercussions of you paying that card down so utilization could drop, right? So for this particular example here, 17% is too high. You got to be at 10% or under. Really, the lowest or the closest you can get to about 1% utilization is the better. Okay, so but anything under 10%, you're gonna be good to go. So I'm hoping this is making sense to you with this credit utilization. Let me know in the comments if you got any questions on this, but this is a really important factor of being able to get business funding. Also too, utilization on both sides is important. Okay. So these are the 4 major business credit scores. Okay. You got Dun & Bradstreet, which is paydex score. Everybody knows that one. You got Experian, which is credit ranking and telescore, Equifax, which is business payment index, and then FICO, which is the liquid credit SBSS. Okay. And then you also have the small business financial exchange also. So all of these credit scores, they do matter. Okay. Because business, when you're trying to get business funding, they do run your personal credit and they pull your business credit as well. Now, you don't have to have an 80 paydex score. I'm not saying that, but if you have already business credit cards and they have high utilization, a lot of times people think, oh, okay, it's on the business side, it doesn't matter. No, they're going to look at that too. Now, the business utilization does not have to be as low as the personal side. You can get away with having about 30 to 40% utilization on the business side, but it cannot be maxed out. You can't have 2 or 3 business credit cards already and they got high balances on them. You're going to get denied for business funding because of that too. Even if your personal credit is completely optimized and you have very low utilization, all the stuff that we're going to talk about in this video is not going to matter if they pull this business credit and you got maxed out business credit cards. So you got to make sure when you're trying to get funding that you realize that this is also important too. Utilization on the business side matters. So step 2, negative items. This is really, really, really important. A lot of people don't know how important this is. Now, obviously, we all strive to not have any negative items, all right? But even just a year ago, you could get away with having late pays if they were 2 years old. But I'll tell you, ladies and gentlemen, as of today and what's been happening over the last 2 to 3 months, a lot of these lenders are denying people even if they have late pays for 3 years old, 4 years old, 5 years old. So what I'm telling you guys now, you really want to have all this stuff cleaned up. If you want to be completely honest, you got to have all this stuff cleaned up. So really, you don't want to have any late pays. Obviously, collections, stuff like that, you don't want to have any of that stuff. So, we got the 30 days late, 60 days late, 90 days late, 120 days late. Obviously, we have like collections, voluntary surrenders when you like voluntarily do a repossession and you basically tell the lender, come get the car, I can't afford it anymore. That's a voluntary repo. Then you have a regular repossession where they, take it from you. And then you have like a charge off. This happens a lot with people. If you close an account and maybe you had a balance, but you paid it off, it's going to be like a charge off. And that's like a negative item shown in your credit report. So that's something that's not good at all. So, and then you have like a foreclosure as well. That's obviously very bad. So all of these things that we're looking at on this chart, these are all items that we just cannot have on our personal credit report if the goal is for you to get business funding. Just how underwriters are these days, they don't want to see any of this stuff. You can get away with it if you're just trying to do things with your personal credit on the personal side. But when it comes to the business funding side of things, you really kind of have all this stuff cleaned up. So again, really, work on credit repair if you got late pays or if you got collections. Collections and stuff like that, that's a little bit easier to get off. Late pays I know are very hard to get off, but this is just the landscape right now. I'm not saying it's completely impossible to get business funding if you don't have if you have late pays, but just from what we've been seeing, people have been getting denied with late pays even 2, 3, 4 years old. So it's just something I want to bring to you guys' attention as a reason why you will probably get denied if you have these things on your credit report. Now, step 3, the last step in our process here, is going to be limit new accounts. This is also very important. So we were talking about inquiries earlier on. So let's kind of go back to that a little bit. So it says, how long do hard inquiries stay on your credit report? It's 2 years. Okay. So obviously when this first happens, you're going to have an immediate impact on your credit profile. So you're going to get, a ding anywhere from 5, 6 points, something like that. But it is temporary. It's not going to last forever. We talked about rate shopping. This is basically if you're trying to hunt for a credit card, or you're hunting for a new vehicle auto loan, or you're trying to refinance your mortgage, things like that. We showed you the differences between Vantage Score and FICO, how they kind of grade you rate shopping. But that's very important to know too. Really, you don't even want to factor in Vantage Score. I bash on Credit Karma a lot on my channel. They're actually good. It's just you don't want to just pay attention to the score. That's really the only thing. It's great to look at your credit profile because that's a way to get Equifax and TransUnion for free and be able to look at your utilization, negative items, increase, things of that nature. But you just do not want to pay attention to the score. A lot of times people ask me, okay, well, what do you recommend to check my credit? Experian is the number one option. I tell people also my FICO. Those are like the two I recommend. They're just the best at doing it in my opinion. So number one, Experian if you want to get all 3 bills, or my FICO. Those are my 2 recommendations. But inquiries are very important. You don't want to have, in terms of business funding, you don't want to have any more than about 2 or 3 in the last 6 months. Okay, anything more than that, you're looking thirsty for credit. We don't want to look thirsty around here. Okay, so you got to have that stuff eliminated, and new accounts, that factors into that as well. You don't want to have any more than 2 or 3 new accounts in the last 6 months as well. So all of these things that we're talking about in terms of new accounts, that factors in. So when we're all said and done, we're all kind of like got everything solid, right? This is what we want to look like. Having a FICO score of 774, which is great. A lot of times people just think, okay, I got a 780 credit score or a 760 credit score, I'm good to go. No, we got to have the optimization of the credit profile lined up correctly. You're going to have problems. Okay. Total accounts is 74. Do you need 74 total accounts? No. But the more accounts you have, the better, because that demonstrates that you can manage multiple different accounts. That kind of goes into your credit mix. Having, like, let's just say rental accounts on there, installment loans, credit cards, auto loans. If you got like installment loans, like a student loan, stuff like that, like all that stuff helps your credit mix, and that makes you have like a very, what they call, thick credit profile. Banks do like that. Okay, so length of credit history. This is also something I didn't touch on. This is very important as well. If you got a thin credit profile, that's not good either. If you're applying for a lot of stuff in a short period of time, you look thirsty for credit, and they're going to deny you for that too. I always tell people banks love giving money to people that look like they don't need it, and that's how you do that, by not having a lot of new accounts, and that also helps your length of credit as well. So you don't need 10 years. That's a good marker, don't get me wrong, but anything over about, say, 2 to 3 years, you're in a good spot. Okay, inquiries, we want to have no more than 2 or 3 in 6 months. Now, this doesn't mean you can have 10 inquiries on your credit profile, but if all those 10 inquiries was from last year, you're good. Okay, because you don't have any in a 3 to 6 month window. So that's very important. Utilization at 3%. That's fantastic. Okay, and then no missed payments. They don't have any collections, no charge-offs, nothing. Everything is clean. This is like a fundable credit report. You walk into any bank with a credit report like this, you're probably not going to get denied. Okay, now stuff does happen. Things do happen. There's a lot of factors that go into play. That's why a lot of times with our clients in our mentorship program, people come and get our help just to build this strategy out, because a lot of times people just randomly applying to banks and don't have any clue or any strategy behind it. Okay, so as I always tell people, credit is super easy to mess up and extremely hard to fix, and you want to try to maximize your opportunities as much as possible. Okay, so utilization, again, we talked about that. Very, very important that you have that low as possible, and then the derogatories as well. Now listen, if you already have a 700 plus credit score, you've been trying to do this on your own, or you know been on this funding journey and you're not getting it done, you want to just skip all the nonsense and just kind of be able to line up with us in our mentorship program, get one-on-one guidance, have us build you a custom funding strategy, get access to our banking contacts, and help you build this thing out and get approved and, you know, get the funding that you need for your business, go ahead and click the link in the pinned comment below. It's going to take you to a page where you can fill out a short questionnaire, and then you'll be able to go ahead and book a call with us on calendar, either me or one of my team members, and we'll be able to go ahead and sit down, talk with you, have a call, and see if it makes sense for you to work with us and join our mentorship program to help you get business funding. So again, I hope you guys enjoyed this video. Smash that like button, subscribe to the channel, hit that bell for notifications so you will be notified every time I drop a new video. And if you want to see the fastest path to 100K in business funding, if you want to get more information on how to really line up your personal credit profile, go ahead and watch the video that's on the screen right now. It's going to take you to a video that I recently did where I break down, get on my whiteboard, and show you exactly A to Z how to optimize your credit profile in more depth in this video even, and really kind of go into the nitty-gritty of what's important on your personal credit to be able to get this done. So go ahead and click the video on the screen right now, and I'll see you in that one.